There are two different frameworks that one can employ. So a simple way to get a 100-bagger, one could get a 100-bagger on a company that is never going to grow by buying it at 1% of liquidation value. Right. So if something is worth $1 billion and you were able to buy it for 10 million, and you were pretty confident that the $1 billion value would not go down, you might have yourself a 100-bagger. So in 2019, I found this company in Turkey, which was basically trading at 3% of liquidation value, very similar to Belridge. And unlike Belridge, or maybe not quite unlike, because Belridge eventually, I think Shell pulled out something like 40, 50 billion of oil from that oil field, and it's still flowing today. But this company in Turkey, not only was it a 3-cent dollar bill, it's growing its value. And in fact, in the last 3 years, it may have doubled its value. I was buying something with a market cap of 20 million that was probably worth at least 600 or 700 million. It's probably worth something like at least $1.5 billion today. And it's going to keep going. So I may not need to do a cross connect. All I may need to do, which is very difficult to do, is do nothing for a very long period of time. Like Rip Van Winkle, just go to sleep. So I could either go to sleep for 20 years, or I could spend 20 years talking to the wonderful students at LSE. So I hope you will invite me back, because I need something to do for 20 years, because I have literally got nothing to do now. I just have to twiddle my thumbs and make sure there's no sell orders placed. And so one way you can get the 100Xs is, and take a step back, there's 50,000 or so publicly traded companies around the planet. All their prices are set in an auction-driven format, like horse racing, the pari-mutuel system. So the way prices are set on the New York Stock Exchange, the way the odds are determined on the race course are identical. Basically, it's the buyers and sellers that set the price. And because of the auction-driven nature of the market, so if we have a private company, it has a gas station, they want to sell the other station, they want to sell their petrol station, you're generally going to have intelligent buyers facing an intelligent seller, and you'll come up with some price that will be close to the actual value of the gas station. But when you have auction-driven market, you have a lot of undershooting and overshooting that happens all the time. In 2022, we saw a lot of overshooting, right? A lot of high flyers, a lot of great businesses got really, a year ago, for whatever reason, these auction participants gave Facebook/Meta Labs a certain valuation. And then by the end of the year, they had taken it out back and shot it. The same business, not much has changed. But in the course of a year, there was a dramatic change in valuation. And if Meta had been a private company and they tried to sell themselves a year ago, and they were trying to sell themselves today, the delta may not be anywhere near the way it is in the equity market. So when we see the undershooting of securities, that gives us some possibilities. And then you might say that this is so hard, 50,000 stocks. And if you ask Warren that, he would say, start with the A's. And Buffett actually went through in the 1950s, he went through something known as the Moody's Manual, which listed all these companies. There are 4 companies on a page, very thin pages, big thick books. And I bought a couple of Moody's Manual on eBay a few years back just for nostalgia's sake. And but he would go through each company, and there were thousands of companies, and they just had basic balance sheet and income statement data. And he ran some classes with MBA students a few years back. And he would find a company where the earnings were $15 million a year and the market cap was 25 million, things like that. It's just things that made no sense. And when he found these things that made no sense, then he would dig into those. And he did really well. To take a step back, going back to horse racing, you know, who we are as humans at the age of 5 and who we are at the age of 95, there is no change. Basically, our personality template, our traits, our likes and dislikes, who we are, is pretty much hard-coded at the age of 5. And between your genetics and your experiences in the first 5 years of life, that die is cast. And after that, there's not going to be any change. Buffett, when he was a young teenager in Omaha, he used to go to the local racetrack, Aksarben, which is Nebraska spelled backwards. And what he'd do is after all the races had been run, he'd collect all the tickets that people had discarded and thrown on the ground. And he'd collect them all, he'd bring them home, and he'd go through each one carefully to see if some drunk guy had thrown away a winning ticket. And lo and behold, he would actually find a few tickets which actually were winners, but people had thrown them away. And then because he was underage, he couldn't go to the window to cash it. So he would send his Aunt Alice with these tickets to cash them in. And so the kid who was doing that at the age of 12 was the same kid who at the age of 26 or something was thumbing through the Moody's manual in 1956 or 57. And one time my friend Guy Spear and I visited his office in Omaha. I think this must have been like 2010 or 2011. We used to go have lunch once a year with Buffett's assistant, Debbie Bozanik. And we paid a good amount of money to have lunch with Buffett. But quite frankly, the lunches with Debbie were a lot more fun. And I learned a lot from Debbie. And one year, I think 2010 or 2011 or thereabouts, we had gone to have lunch with Debbie. And when I went to the 14th floor of Kiewit Plaza with Guy Spear, Warren was standing right at the elevator, like to receive us. We didn't have an appointment with him or anything. And he says to us, "Would you like a tour of headquarters?" I said, "Warren, if you want to hang out with a couple of yo-yos, it's perfectly fine with us. We've got nothing to do twiddling your thumbs." And so he gave us a great tour of the headquarters, showing us all the mementos and different things. And then he took us to his office, his private office. And there I saw on his desk the Japan Company Handbook, which is basically just like the Moody's manual. It's like value line for Japan. And they have 2 companies on one page, lists every Japanese company. And he was thumbing to it. Now Berkshire's managing tens or hundreds of billions at that point. And you can't be playing these Mickey Mouse games with the Aksarben tickets and stuff. So I had actually been going through the Moody's manual, just coincidentally, the Japan Company Handbook, just coincidentally, before I actually went to the office. So I took his copy of the Japan Company Handbook and I said, "Warren, I'm going to like dog ear some pages that I found interesting that you might find interesting." Now, I don't know whether he was horrified that I was taking his Japan Company Handbook and mutilating it, but I just went ahead and did that. And a lot of the companies that I thought were these super cheap companies, statistically, were towards the back of the book. He says, "Yeah, what I found is the good stuff is always at the back." And so the kid at 12, the kid at 26, the kid at 81 or 82, it was the same kid. No change at all. And the kid today is the same too. So Munger would say, when you say, "Oh, this is so much work and this and that," Munger's answer would be, "Why should it be easy to get rich? Why should it be so easy for you to find the 3-cent dollar bill?" But what I'm here to tell you is the 3-cent or 2-cent or 1-cent dollar bill is sitting there. It's there today, it's there tomorrow, it's there 5 years from now. The only question is, how determined are you to find it? And how many pages are you willing to flip? How many rocks are you willing to turn over? And like this company in Turkey, it's like one and done. I don't think God loves me so much that I'm going to find another one. But I still keep looking. I'm still hunting. One and done is perfectly fine with me. It's better than 0 and done.